Welcome to the Depth Dive. Today we're digging into IBM International Business Machines.
Yep, we've got the latest financials, earnings reports, analyst views, basically sifting through this report IBM.pdf for you.
Exactly. We want to pull out the key stuff, give you a clear picture of where IBM stands now and, where it might be heading. Fast insights, that's the goal.
Right, cut through the noise. So where do we start? Stock price.
Yeah, let's do that. So the report has the last close at $232.41.
Uh-huh. And it mentions a couple of valuations, a fair value around $236 and, well, an internal target closer to $216.
Interesting spread there. And the 52-week range is pretty wide, too. $162 up to $266. Quite a ride over the last year.
It really shows the volatility, doesn't it? Especially in tech right now.
So why does the report think IBM has staying power? It mentions a narrow economic moat.
Right, and that's mostly down to, well, their really long-standing relationships with big enterprise clients, and the fact that it's, frankly, a huge pain for those clients to switch away from IBM's core stuff. Think mainframes, the Z system, and their embedded software.
So high switching costs, they're kind of locked in?
Pretty much. It creates stickiness. But, the report also flags that the consulting side and software that's based on usage,
Consumption-based, yeah.
those are more sensitive if the economy gets shaky. Macroeconomic uncertainty hits them harder.
That makes sense. So that core business provides a foundation, but what are the analysts saying overall? You mentioned different targets earlier.
Yeah, the average target over the last 6 months is about $240.29. But like you said, opinions differ.
How so?
Well, KGI Securities just initiated with a hold, but then you have UBS, they recently upped their target, but only to $170.
Wow, $170 versus an average of $240. That's a pretty big gap.
It is. It really highlights how analysts are weighing, the strong parts versus the potentially weaker parts and the whole economic picture.
Okay, so mixed signals from analysts. Let's talk actual performance then. Q1 2025. How did they do?
Actually, pretty solid. Revenue came in at $14.5 billion. That's up 2% in constant currency, so adjusting for exchange rates.
Right, gives a clearer view.
And they highlighted really strong profitability. Plus, free cash flow hit $2 billion. Best Q1 in years, apparently.
$2 billion free cash flow in Q1, that is strong. Where did the strength come from?
Mostly the software segment. It grew 9% constant currency. Really impressive numbers from automation, Red Hat, and data.
Okay, 15% for automation, 13% Red Hat, 7% data. Those are good numbers. Suggest their strategy there is working.
Seems like it. But on the flip side, consulting was flat year over year, again in constant currency.
Flat. Why was that?
The report points to maybe some clients pausing discretionary spending, non-essential projects, and maybe some government spending cuts factoring into.
Ah, okay. So that economic sensitivity we talked about is showing up in consulting.
Exactly. It's that divergence, right? Strong software, but cautious consulting.
Yet IBM reaffirmed their full-year guidance.
They did. They're still expecting revenue growth to speed up to 5% plus for the year, constant currency, and about $13.5 billion in free cash flow.
So they're confident despite the consulting slowdown. What's driving that confidence?
A lot of it seems pinned on their big strategic bets, hybrid cloud and AI. The report says this focus is really resonating with clients.
Resonating how?
Well, clients are looking for cost savings and productivity boosts, and IBM's positioning its hybrid cloud and AI solutions as the answer.
And they mentioned that generative AI book of business, over $6 billion now.
Yeah, inception to date. That's a significant number, and apparently a lot of that is driven through consulting engagements.
Interesting. So consulting might be flat overall, but it's key to selling the AI solutions.
Seems that way. Plus, they've got the new Z17 mainframe coming soon, expected to have better AI capabilities, better security. They're hoping for a strong upgrade cycle through 2025 and into early 26.
Right. The mainframe cycle is always a factor for them. And acquisitions.
Yep, HashiCorp and AST. They expect those to chip into the full-year growth numbers, too.
Okay, makes sense. And they're using AI internally as well, right, to boost their own productivity?
Transforming their own operations.
Yeah.
So the outlook seems to be software accelerates, infrastructure grows thanks to Z17 and storage, and consulting kind of stabilizes or stays flat.
Got it. Let's quickly hit some key financial figures. TTM trailing 12 months revenue was $62.83 billion.
Yeah, and net income, $5.47 billion.
Right.
The forward EPS estimate is $10.92, while TTM was $5.84.
On the dividend, always important for IBM investors.
Yielding 2.87%, which works out to $6.68 per share annually. Solid dividend.
And you mentioned the strong cash flow earlier. Balance sheet looks okay.
Yeah, pretty solid. They had over $17 billion in cash at the end of Q1. And as the quarterly data shows, they're consistently generating positive operating and free cash flow, returning some of that via dividends.
Okay. So, strong core, good software growth, AI focus. But what are the main risks or headwinds we need to keep in mind?
The big one really is just the overall economy, that uncertainty. If businesses get nervous, they might pull back on spending.
Especially the discretionary stuff that hits consulting.
Exactly. Consulting is sensitive, but also parts of the software and infrastructure portfolios could feel it too.
Anything else?
Well, they did mention expected headwinds to free cash flow for the full year, higher cash taxes, and more capital spending, CapEx. So that $13.5 billion target already factors those in.
Right. Okay, so let's try and wrap this up. Summing up our deep dive on IBM, what are the key takeaways?
Well, IBM's showing resilience, definitely strategic execution, especially in that software segment. The hybrid cloud and AI focus seems like the right direction, driving a positive outlook.
Right.
But the shaky macroeconomic environment is a real near-term hurdle. You see it particularly in the consulting business right now.
So it leaves us with a bit of a question for you, the listener. IBM's betting big on AI and hybrid cloud. Analysts are kind of split. What do you think will be the single most important factor for their long-term success, especially if the market stays volatile?
Yeah, something to chew on.
Definitely food for thought. And hey, if you found this focused analysis useful, if you want more deep dives like this, please do subscribe to the channel.
Yeah, and hit that bell icon. It really helps us out and means you won't miss the next one.